So what do we expect as we head into 2014? I'll quickly go through our forecast, what we said coming into 2013, how those predictions turned out, and again, let you know what to expect for this year. I'm going to start in the office and industrial markets. When we talk about leasing and development, we said coming into 2013, we knew vacancy was going to drop again and construction was going to double. It indeed happened. Vacancy dropped. Construction doubled to 687,000 square feet. In some specific sub-markets, tenant concession packages just weren't what they were a year previous. So in the leasing and development market for office and industrial space, moving into 2014, again, a lot more construction in every geographic submarket. We will continue to have positive absorption. I've mentioned this. Again, industrial demand is going to outpace supply. In the office market, I think vacancy's got to go up a little bit there because, as you may recall earlier, 1.6 million square feet of space already underway. But it's still a healthy market overall, and there'll be some new projects that'll be announced. How about in the retail markets, leasing and development for 2013? We knew construction was going to slow, but there'll still be positive absorption, slowing construction, positive absorption. Accordingly, vacancy was going to drop. That indeed happened. It was still a big construction year, but it wasn't to the levels of 2012. Again, we got a lot of absorption. We got more than we got the previous 2 years at 4%, and vacancy drops to its second lowest point in 10 years. In the retail markets, we're going to finish the year with more construction than the previous year. Absorption is going to keep up in the retail market. Vacancy is going to remain at 4%. And there'll be a lot of attention on these neighborhood centers. Okay, the apartment market. For 2013, we knew there'd be some supply pressure by year end, but again, we'd still get good demand. A lot of that was going to be driven by population growth, and vacancy was going to go up a point. I mean, we were right on here. I guess you could say close. Vacancy went up, but it only went up a half a point as we continue to see strong absorption in the apartment market. Now, for 2014, as I said just a minute ago, we've got to see some supply pressure in this market. I've already started to see some over the last 2 months as it relates to rental rates. Again, potentially 11,000 new units on the market. I don't think they'll all get built. We'll have historical, positive, strong annual absorption, but it just can't keep up with the new construction. And vacancy goes to 8%, the largest one-year jump since 2001. But it's still a healthy market when you look at 9.5% vacancy in 2009, 11.5% vacancy in 2001. We probably need to analyze this market for the next year, but I believe if we get a large percentage of those additional 11,000 units that are going to be built, this market's going to go to double digits in 2015. In the single-family homes market, for 2013, we knew there'd be continued demand. Maybe could see in construction increase by 20%. Everything's up, average home prices, and growth continues. We're close here. Construction was up, but only 10%. Home prices are up almost 4%. Growth continues. Sales up 30%, and listing time down 19%. How about for 2014? In the single-family homes market, we're continuing this trend from investor purchases. A lot of investors that are buying homes that are going back to the bank, and perhaps not even just individual home, portfolios of homes that are going back. This is continuing to change over to the traditional buyer. We do expect new construction to increase, especially in outlying areas where we'll see a lot of activity driven by pricing, and trade up and second home buyer activity remains slow. Now, investor outlook for land. People are still recognizing, as a matter of fact, the survey that we took the second largest group, recognize that raw land continues to be a good long-term investment. National builders are still going to be active, but they've got pretty full inventories right now. And what that's going to allow is going to allow the local developers and the smaller developers to get back into the game, and the lending institutions are going to allow them to do that. As land prices increase, obviously it's going to affect home pricing, and these outlying communities are going to start to get a lot of action again as developers are trying to meet a specific price point. Western Wake County seems to be one of the hottest markets now. Still a lot of cash chasing apartments, so land sites for apartments will still be at a premium. Some improvement in the industrial and office land as we see users that are talking about wanting to own their own property and speculative development. And this retail sector continues to improve. And lastly, our investor outlook for income property. As long as interest rates stay low, investor dollars are going to be looking beyond the bond market for better returns, and they look to trophy properties to provide this. But gateway cities, 24-hour cities, it is really hard to find these trophy properties. And when they are available, there is a lot of money chasing them and a lot of deals, and it often comes down to a bid situation. So accordingly, there'll be continued interest in second-tier markets, and Raleigh-Durham is going to lead the way, and investment activity will increase again by 40%. Now, you can see that NAI Carolantic, we are awfully optimistic as we move into 2014. I want to tell you again, thanks for being here, and I'll see you out in the concourse a little later on. Thank you.